All right, good afternoon, good morning, everybody. This is Trendy John from Simpler Trading. We're going to go ahead and start our broad market analysis. Today is the 1st of September. All right, so happy September. Can you believe we're here? I cannot believe we've already arrived to the ninth month. When I start counting, I'm like, okay, wait a minute. So next month we have some birthdays, we have Halloween, we have Thanksgiving, and then in a couple more months we have Christmas, and then we have a new year. I can't believe, like, where has the time gone? All I can say is every day that I get to be here and talk to you guys, I feel very humbled. I'm so appreciative of our community and our amazing, talented group here at Simpler. And I just want to say thank you to everybody. Before we get started, please go ahead and hit the like button on this and make sure that you share this broad market analysis with your friends and family and anyone who might be interested in learning a methodology that can help them in their trading. All right, let's go ahead and get started. So we will be covering today from the 1st all the way into the 6th. We do know that tomorrow is Labor Day. So again, happy Labor Day. I hope you guys have an amazing weekend. Please be safe. I can't wait to see you. And just as a reminder, I will be taking off going to Nashville for some family vacation, and I will be leaving Wednesday morning, and I should be back on Tuesday morning, or I will be back on Tuesday morning. Okay. But obviously, you guys know you're in great hands with Melissa. And hey, while we're speaking about it, man, did Melissa not really just deliver the most amazing spy trade on Friday? I absolutely loved it. 300% for you folks. And it sounds like she really walked you through the plan and kind of held right that confidence with all of you. And I'm really excited. So, anyways, let's get started. We're going to go over the macroeconomics, this week's major U.S. economic reports. Again, we're off tomorrow, Labor Day. Tuesday, S&P final manufacturing PMI, construction spending, ISM. All of these are in Eastern time. Wednesday, U.S. trade deficit, 10 o'clock job openings, and then we're looking at factory orders, Fed beige, and then auto sales. On Thursday, we have ADP employment, initial jobless claims, U.S. productivity, S&P final U.S. service PMI, and ISM services. Before I go any further, if you have not heard me say this before and it's your first time watching, thank you so much. But just understand that all of this information is just a catalyst that pushes price either into demand, which is annotated by the green boxes, and then we look for prices to go up from there. Or this catalyst can push price into what we call supply zones. So it pushes price up, and then we look to bring our stops up and so forth, and you could get a possible short out of these supply zones. Okay. Again, these are just catalysts that push price into supply and demand. So we want to be aware of them, but we don't want to be afraid, do we? We want to trade these catalysts. It's super fun. On Friday, U.S. employment report, U.S. unemployment rate, and then hourly wages, and then New York Fed President William speaks, and then Fed Governor Christopher Waller speaks. All right. So that's what we got going on there. And then important is going to be our earnings for this week. Okay. Now you guys can see things are slowing down big time. So when we come over here, there's a couple names maybe I'm interested in, like how is Zscaler going to do? I like Dick's Sporting Goods, getting ready to go into football season, and there's just a lot going on, right? And all my pickleball fans out there, right? I swear sales are up because pickleball is so damn popular right now. It's crazy. It's like everyone's playing. AI, Dollar Tree, Hewitt and Packard, and then we have Hormel. And go down the list. It looks pretty boring to be honest with you. Broadcom, uh, Path. These are probably DocuSign. And other than that, we got some clothing retail stores in here. But other than that, it's just getting pretty slow. Okay. Next, let's get to the big picture. Let's talk about SPY. I love using the quarterly candle, and you guys can tell this year using the quarterly candle has really helped us in this broad market analysis, and I will continue to always do that. A couple things to point out: we just closed out the monthly candle. You are looking at a quarterly candle. Each one of these represents one quarter. And over here, you can see on TradingView, it lets you know how long it will take until this candle closes. We have 28 days and 21 hours before this candle closes. And as of right now, we have continuation. That's right. So we have a higher high, right? Things are looking great. We have 4 quarters up in a row ever since we made this inside and up formation. We also had a buy signal way back here. It looks like in October timeframe, and ever since then, things have looked great. I always want to remind everyone, as long as price is staying above this cloud here, this EMA cloud, we are staying bullish long term. If for some reason this year, election year, we get some sort of catalyst out of left field that you weren't expecting and price drops into this cloud, this is where I'd be a buyer. Now, far as notes go, new month, 28 days until the candle closes, 559 remains the over under for me going into this week. It is the line in the sand. I believe probabilities are in our favor for an all time high this week. Last week, I talked about the daily closing at least 3 days over this level, and then I could see a high. This was our first day on Friday, so we'll come in on Tuesday. We'll see if we can get another close above the 618. That's where that 559.30 is coming from. And I'll bring down here, let me bring down the room real quick so you guys can see this. So I went ahead and put the chart on here so you can understand where I'm getting those levels from. The 559.30 is at 88.7. All I did was place my coefficients, okay, at the pivot low, pivot high, as prices moving up. We talk about the Fibonacci. I taught you that. We got above the 88.7, and this level has indeed been a line in the sand. Now, my probabilities and show me that if we can get 2 to 3 days of a close consecutively here, we should have about 95% chance that we take out the all-time highs. And again, that's what will bring the next target. Now, my next target is 568. Okay, so 568 is what I'm looking for. And our short-term support, okay, is going to be 559.30, that 88.7 level that I just showed you. Now let's go ahead and click on the cues and show you what that looks like. Now this one's a little bit different. Matter of fact, you might not know this because it was pretty exciting on Friday, but overall, the cues actually in the NASDAQ performed not as well as they did last week. Matter of fact, we made a lower high this past week, and this candle for the quarterly just came in a little bit. Currently, it is an inside candle. It is not a continuation candle. Every once in a while, it pops up here, but it comes right back down. So just showing a little bit of weakness there. We hit our target several weeks ago up here, and ever since then, it's just been the top, and we just kind of been floating sideways and then pulling back into support. Now, my notes, same thing. New month, 28 days until this quarter candle closes. Not much strength this past week as price closed lower than the previous week's high. This past week was an inside candle. So on the weekly, it is an inside candle, and I just want to show you guys that. I'm going to pull this down. This is what it looks like from a weekly standpoint. You guys can see this is last week's candle. The close, which is at the bottom of that body, close within this body. That makes it an inside candle according to methodology taught here at Trendy. And what's really neat about this, though, is if it goes over the top of this body, then it is an inside and up formation. And if it breaks down below the 618, I want to use this 618, this golden fib, as that inside and down formation. So you guessed it, those are going to be the most important levels for us going into this week, okay? So let's talk about it. This past week was an inside candle. Bulls need about 480. That 480 plus is going to let me and let you know that we're going inside and up. And the Bears, they need below that 473, which was that golden Fibonacci that I just showed you. Let me show you one more time so you don't forget what it looks like. All right, you guys can see. Again, coefficients placed. We got the 618. That's your golden fib. You got the cloud. Everything looks really good here. I mean, this is solid support. And us coming into a short week, typically you don't get a whole lot of follow through, but you never know. All right, so let's keep our chins up and see what we get. But again, guys, Bulls, you need 480, so just right above there. And Bears, I say 473 because that's the 618, but truthfully, I really feel like using the cloud and this golden fib, this is going to be your support this week. So if I were trying to short, I want to get short while the market's going up, not while it's going down. If it's going down, it just looks like your reward's just not there. All right, we're just too close to the SPY breaking out to all-time highs. We keep showing that the 618 is holding, and so those things for me are a positive. So I am bullish with a little bit of caution this week. Okay. Let's go ahead and move this back out of the way here. All right, moving on down. Now I want to take you into the dollar. Let's go to the DXY. All right, so this is the dollar. We're not going to use a quarterly here. We can use a weekly, we can use a daily. But the big point here is that I want to show you that the dollar did come into the demand zone. All right, and we got the pop that we were looking for so far. That's exactly what's happening here. Now, the dollar could push up, but my big notes to you for this week is currently it's in demand and bouncing. Not much of a threat unless it gets above the 618 or the 104.34. So that's going to be that level here. And I just took my coefficients, used one of these highs up here, went down to the low, and these are our Fibonacci's, okay? So if we bounce up into here, I expect this cloud and this golden fib to be a rejection point. And quite, uh, well, to be frank, all of these can be resistance until proven otherwise. So they have to get through, the dollar has to punch through there and hold above there for me to really feel threatened. Okay. Now, there are a couple signs here we need to be cautious. And again, one, dollar starting to bounce out of demand. And I was just showing you that the cues were, just a tad bit weaker than I would like to see. All right. But SPY looking pretty good. Looking pretty good. All right, and we'll get to that here in a second on the ES and the NASDAQ futures. Next thing I want to go over is the TNX or the 10-year Treasury. This one's going to be short and sweet. Nothing's really changed here. It came down into inside nut formation. We got the bounce that we're looking at, but it's just like the dollar. Even if it bounces here and the market starts to get a little spooked, I think it's going to reject here around 4 by 4.13. Okay. Let's go ahead and move down. That brings me to the skew. The skew is your hedge funds and basically, how they're feeling about things. When this level starts to push up towards here, it's the pucker, right? You better wave a little yellow flag, maybe even a red flag. Timing is the variable. Usually, when the skew is rising to these extreme levels, we are at 159. We're looking for a temporary pullback. And again, guys, like I said, the pullback. If you time it perfectly, you could do really well. But we have not had, except for maybe a couple events this year, where we've had some pretty strong pullbacks, but most of them have not been worth it. They're more. It's it, in my opinion, it's worth more finding the demand zone on a shorter time frame and going long than it has been trying to short these. Okay. All right. So I said that, but we are at extreme levels. If you were to place a SPY QQQ chart behind this, you'll see that when levels get high, the market starts to go down. Now, election year, we've been staying within this entire box this entire time. And I want to go over this again. Caution up here. So when I say caution and I say, hey, maybe the market could pull back, it just means if we're long, which we have been, that you start to think about these things, you start to pull up stops, you take what the market's going to give you, unless you're building long-term positions. For me, I'm also building long-term. So when we get to this point, I'm actually getting excited because I want to add to my existing long-term positions. Okay, because I'm expecting the market to pull back. So if I'm not getting the pullback, it's actually kind of a bummer. It's like, man, I don't want to keep paying high prices for things. I want them to come back on the clearance rack. If if the price of the skew reaches down here, it's worked all year long. You buy 5 to 10 days out on the SPY for calls, and at the money, maybe just a tad bit out of the money, and you hold for a little bit, and the market skyrocketed. Now, in the past, again, I can't go on without saying this. In the past, it was normal for us to come down into these areas, and that's where you see the extreme, the fear and the greed go to extreme fear. And this was always a great buying opportunity with time. And these levels up here has always been a great opportunity to go short with time. Okay. So again, not so much this year. We've been basically in this box or in this bubble, whatever you want to call it. And we had to come up with some new levels, and those levels worked really, really well. Okay. Next thing that I want to talk about, and that leads us to the fear and greed. So come right over here. And let's not do that. Let's go here and here. All right, so fear and greed, it did tick up about 10 points. I believe it was 53 last week. 63, just showing a little bit of greed, right? But hey, guys, don't we love to be extremely greedy, right? Everybody wants a little bit of money. Yes, all around there. So there is room for the market to get a little bit greedier coming in on this 4-day week that we'll be looking forward to trading. So don't trade just based off of this thing. I'm just letting you know. This thing's ticked up. It's saying, hey, you guys are being greedy. We're having a good time out there. I hope you're having a good time, right? And that's pretty much it. So just be aware of that. All right. Next thing, we're going to go. My favorite part of this whole broad market analysis is that it all really comes together. But, this is where it gets fun for me. I want to get into the ES futures really fast. And currently, market's open right now. Believe it or not, you can trade some futures, but it's pretty slow. It's going to be pretty boring. But anyways, nothing changed here. Support worked very, very well last week. We pushed up, little hammer candle there, and currently just really sideways. All right. Supply caution right here, very, very, very important. Caution as we approach the supply zone. In 2024, supply zones have merely served as temporary rejections and a place for us to get long. We are not extremely bullish until price is up and over that supply zone. And I said this last week as well. So we were pretty open-minded, and I think that led us to being, good traders last week. And then Nasdaq, same thing. It needs to get over supply, and I'll show you that here in a second. Both are saying bullish, but be cautious. I know that sounds weird. If you're brand new, you're probably like, "What, man?" Um, my overall sentiment is bullish. I'm just saying we could be sideways and choppy for right now. All right. All right, next chart, we're going to be looking at the daily. This one's important because I have buy triggers and short triggers. I did not change my triggers from last week. You can see they worked really well. If you want to get more insight on this, on how to trade it, just come in the room, pay $7, hang out with us for 7 days. You'll, find out a lot of cool stuff that we teach. Another thing, I'm not huge into shapes, but if you look at this, you can see it almost looks like an inverted head and shoulders, or it looks like a smiley face for all-time highs. I don't know. You tell me. We got resistance here at 5654, and that's been resistance all week. I can't make this stuff up for 2 weeks actually. And then I got a short trigger here. And again, we don't just go, "Hey, John said there's a short trigger, I'm going short." There's a proper technique around this. And again, if you want to check that out, come and hang out with us. All right, next thing we're going to be looking at is the 4 hour. These zones you can see worked really, really well. My take on this, or my notes for you, is it worked here, and then later, or this past week, we came into the 4 hour zone again. We keep coming back to this, so we know that there's demand there, but we still haven't really come up and tested the supply, and you guys saw that on the higher time frame as well. And so just be aware of that. All right, just because we're starting to move up here, be careful. We could roll over. Doesn't mean hardcore or anything like that, but we just want to be aware of these areas. So from a 4 hour perspective, this is your demand for this week, and this is your supply. Let's go ahead and move into the Nasdaq. All right, guys, don't forget, please hit the like, okay? Please hit the like. We have, lots of people watching this, and I really, really appreciate it. That lets me know that when I'm doing this on my Sunday fun day, actually, I'm looking out back right now, and Ashley is picking up stuff out of the yard so that I can get out there and mow. It's the sun, it is absolutely baking out in Florida. I mean, it was hot as ever today. And yeah, so I said I'm gonna mow the grass tonight. I'm waiting for the sun to go down a little bit, and we got that new electric mower, so it's like super quiet. Love it. Anyways, let's move on. Nasdaq. Let's go to the weekly. You guys can see it. My biggest thing here going into this week. Boom, the 618 is going to be your line in the sand. That's very important to understand going forward because it is the golden Fibonacci. All right. So currently, we're kind of at or under the 618. Last week that we were a bit weak. Bulls need to see the 618 hold by the end of the week. I just want to see that price is above it. Let this serve as the week's over under. Basically, the weekly line in the sand is going to be the 618. Notice that we came into that support. It worked really well. Notice that the cloud is working as well. Bulls, really, you just need to get up and over this body. And that's going to be, I'm going to pull this up to about right there. This is going to be your new alert. And that's going to be 19,788. That looks really good for the Bulls. And I'm not really concerned unless we break down below 1929.25. And then I'll start to be like, okay, maybe this is not going to be a good week. Okay. But I do expect buyers to show up here. So again, your major support and Bulls need right in there. All right. Next one, let's look at the daily. This one I did change up just a tad. So please take the time to take these triggers and put them on your charts. All right, so you just pause right here if you want to, or come back to this. And these are your triggers going into this week. Let's go ahead and go into the 4 hour. And just like the ES future, it's a little bit different. We're bouncing in a zone. We're getting back up to supply, but we can't break through supply. So this really, lets you know that this is why things are really slow. All right, too much supply. We're trying to chew that away. We're trying to build momentum. We got to get out of this zone, guys. Things start to look really good if we get above 19,980. And if we get back down to 19,029, as I was saying before, look for buyers to come in, but I don't really want to see that. Okay, I really don't. I shouldn't say I don't want to see it. I do want to see it as a demand and supply trader. Like I want to get long down here, but if we make a new low, is what I should say. Just be cautious. Okay. Just be cautious. All right, next thing I want to show is somebody said, "Hey John, what do you think about Bitcoin?" I've been putting this on here every week. I want to show you the power of supply and demand because it really is awesome. So last week I said, "Hey guys, I'm bullish as long as the demand zone holds." However, and I left the notes in here that there's a big red box up there. All right, so check it out. Red box before and after. Boom, red box. I can't make this stuff up. This is why this stuff's so awesome. I don't care what you do right now. If you think you got the best technique in the world, just add some supply and demand to it. And oh my God, you're going to be like, this is amazing. Just do that. All right. It's free to learn supply and demand. You can learn it all over the place. However, right? Come and learn it from the best right here at Simpler Trading, where me and Melissa will teach you how to identify this stuff. And then we got these really cool indicators that really help this a lot faster, find these levels and so forth. But look at that. I mean, this is why we have zones so that we understand where price can reject. So I'm going to stick to my overall thesis as long as the green zone holds. And I get it, guys. We can come all the way down to 47 and I could still be bullish. All right. I just want prices to hold and stay above this big green box. All right. Next thing that I want to talk about is going to be the VIX. Okay. So we're going to come over here. And, I think we're headed down to 14, maybe sub 14. Um, and because of that, market could still melt up a little bit. We could, start to see some extreme greed, if you will. But things are coming down like I want them to. They did stop and stall at the trendy edges. Oops, sorry about that. Not sure what happened right there. There we go. Not sure what got typed in there, but same thing. We came into the trendy edges, and because we came into the trendy edges, this let me know that there's a little bit of demand in here. So we could find a little bit of volatility on Tuesday's open. I guess we'll find out. But for right now, just a little bit of caution as we get closer down towards 14 to 1375. We could see some volatility in the market, but as of right now, we have lower highs, lower lows. It looks like a meltdown, and for the market to melt up a little bit, nice and slow. My feedback for you, just like last week, it's a little volatile. When it gets volatile, smaller positions, so lower allocation, wider stops. Okay. So again, everything's about allocation and your risk tolerance. You got to learn that. I don't care how good your indicators are. I don't know how well you did last week. The market has a way of humbling you. And really, at the end of the day, if you're trading with size that you're super comfortable with, you're going to do so much better, in my opinion, not only mentally, but also you're going to see it, uh, you know, through the years of trading. All right. All right. Well, we can't wait to see you guys. Please come over to simplertrading.com. Check us out in the Trendy Trading Room. There's a reason why we are who we are and why we're here, and we can't wait to see you. Have a great day.